Good morning, good afternoon, and good evening, depending on your time zone. Welcome to this weekly update on our instrument. For most of us learning Forex and trading, the first and basic things we learn about Forex is to learn about structure, and that's structure in its elementary form or basic form that they talk about. What are you looking at? Is it an uptrend? Is it a downtrend? Is it a consolidation? Those are the three main structure we look at elementarily: downtrend, uptrend, and consolidation. Yeah, floppy market is the fourth one that you can't really say this is the direction of the price. Those are elementary things. Then you learn about trend lines. The trend lines can be horizontal. When it's horizontal, you talk about the trend support and resistance. Then the trend lines can also be diagonal when you are using it as a trend support or a trend resistance. Now, all these things are useful in themselves because they are basic things to guide you. They are useful. Then you learn about price action at a particular support and resistance. You learn about price action, and the candle formation. You talk about pin bar, you talk about engulfing candle, and all what have you. Engulfing candle, pin bars, and all of those candles, they are useful tools, but you can't just use them anyhow. You cannot just use them anyhow because engulfing candle in a consolidation does not mean anything. Pin bar in a consolidation does not mean anything except you know how to use them. So now, in an advanced training, we come about the structure of Elliott wave, and which is different from the basic structure that I talked about, or elementary structure that I talked about trend in the market structure, trend like uptrend, low trend, and consolidation. Now, the Elliott wave introduced a new perspective that we talked about, and I talked about that, a lot of times, and its own structure, the structure of the Elliott wave, and the wave format that you expect to see in a corrective wave format or in an impulsive format. I'm just building all of these to guide us because most of the time, all you want to know is that, okay, what are we doing next? That's what is most interesting to you. What are we doing next? Where are we going next? Then, in Elliott, what is very important to Elliott is fib relationship, of a particular wave to another wave. And that also will guide you. When we have this move to the downside, the other move goes against it. And so we talk about what fib relationship, what is it that we are doing? That's what it's all about. And when we have this move, we have a counter move, this move, 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 a counter move. So where are we going with all of this? So I'm going to be talking more on that. When you have a big move and you have a correction in its lower time frame, vis-a-vis the fib extension or retracement. Because most of the time, when we are looking at fib retracement, fib retracement is to guide us at times. For instance, if we are going to retrace the whole length of this, fib retracement is to guide us. But the internal correction of that retracement also comes handy. So in its own internal correction of the retracement, we can expect a flat. We can expect a zigzag. And we know the importance of zigzag and flat correction. When you have a big move and you want to do a big correction to that big move, what the market will do is to give you a zigzag, because the zigzag will throw itself more deep to correct that move. When you are doing a short move and it's not big, we know that the market will go for flat. So we know all of that. For a short correction, market will always pick a flat. For a bigger correction, market will always pick a zigzag. And that is why, even in the motive wave, and you have the first motive wave, and you're going to do the second correction, which is wave 2, market will choose a zigzag. Most of the time, market will choose a zigzag. Then after you have done a wave 3, and you want to do a wave 4, the market would always want to pick a flat, because market needs a smaller correction of a flat, because it's actually shorter. But wave 2, most oftentimes it's a zigzag, and wave 4, oftentimes it's a flat. So I think that would help some of us to navigate when you are seeing corrections at times, that flat corrections, they are almost always synonymous with wave 4. That is not to say that you cannot have a form of zigzag in wave 4. You must know that. But most of the time is a flat, and wave 2, most of the time, it's a zigzag. I'm just laying this foundation for us. But when you are even having this correction of a zigzag, wherever the leg of the zigzag will fall into, you expect it to be 100%, 123, 161.8. If you are correcting in a zigzag of a particular wave, if 123 is going to go past the origin of the first wave, price is not going to use 123. If 161.8 is going to go beneath it and still allow for whatever is fib retracement that is allowed, it may choose 161.8. So 161.8 might be longer. 1.23 might be longer. So price may just want to do an 100. If 100 is no longer. If 100 is going to be longer, price is going to truncate the second leg. So most of the time, if you say, okay, oh, we are doing a zigzag correction, and that in a zigzag, we expect that equal length on the other side after the first A, then we have a B wave. The C wave must be equal length of at least 100% extension, which is 100%. Price may not give you 100%. It may truncate the third leg, which is the C leg, to fit in with the fib retracement. We're going to see this in real time when I begin to go into the trade, into the structure. What I'm trying to say is that if price had come down this way, and we had wanted to do a wave 2 like this, at once, if it were to be a very motive wave, the zigzag A will go up, C will go up, B will come down, and C will go up. And that should not erase the origin of this. And it will fall in. So what it's more important to price is first the retracement of the entire length. That's number one. That is what is most important. The second that is important is whatever the correction is giving us, what is the fib extension within those corrections? So, at times everything falls at the same point, then it's good for you. So we're going to, I don't want to talk too much, but I'm just laying foundation for us. Now, so we know that this is DXY, and the same thing you're going to see on US dollar index, that we have had the first move down here. And we see this as an A in this particular move. We see this as an A. Then we'll see the one down, a new low here, as a B. So in this B, we have said A, B, C of a B, and we now have the C. And this is a flat in the middle to give us an extended flat. An extended flat, this go this way. This one came down to break the low of A, and of course, C is going to break the origin of A as well. And so extended flat. And against this extension here, we don't expect price to come and take the top again. That is what we know if this is complete. So this has given us 1, 2, 3, 4, 5, and the sixth should be coming down if you want to look it at that way. But if you take this one in a flat in the middle here, or a zigzag in the middle here, I think this is just like it's another zigzag in the middle for a B. So we can say 1, 2, 3, and the fourth is coming down. So it depends on how you want to do it. So you want to say, oh, can't it one a placement, but we know that the one in the middle is a B. So you might say 1, 2, 3, 4, 5. The sixth is coming down. So, but in the real sense of it as a complete B, we can say 1, 2, 3, and it's coming down. That because that's a flat. A 1, 2, 3, a flat C. So now we now see this again as a first push to the downside. I'm going to dwell more on the inner structure of what we are seeing here on the daily. So what do we have now? Like I said, that we are seeing this as a first move to the downside. And that this is a correction against this top here. That this should not break this area before we come to the downside. Are we done with this correction? Are we going to be seeing a bearish move in the coming week? So we're going to see all of that. So far, back to back, we've had a push, a bull, the bulls taking, their move 2 weeks in a row now. So what next are we going to see? So that's where we are going. Now, the candle formation probably is going to close like this, and we may be seeing a doji in the coming week. We may be seeing a doji appearing in the coming week. So what we see here is the same thing we are going to see on US dollar index. So it's the same thing. And if you go to DXY, I'm sorry, euro dollar is going to be an inverse of what we are seeing, an inverse. In euro dollar is going to be an inverse. So we can see it's an inverse. So where this one comes down instead of going up, and it's probably bearish. Now, so far, on the larger time frame, these charts to the left, as I said, we are correcting the entire run. That's what we think we are doing. And so far, this move has been impulsive, and that we want to see ourselves, correcting for more upside. And this might just be the last low here around this area, and we push up. Is it? Are we correct? What informs me that this is the last low? We are going to see all of that. So we are going to go on the daily here. We're going to go on the daily, and I'm going to be showing us something here on the daily. Okay, so this is the daily. Now, looking at the daily again, we know that the use of trend line also has guided us most times to know if a wave has ended. If you draw your trend resistance from here to here, down here, this wave has broken it, which means that this wave is complete. If you draw your trend line from this low up here, this wave will cross it, means that this is done. So at the piecemeal of a B, if you draw your trend line this way, this will cross it. If you draw up here, this will cross it, and like that. And if you draw this one up here, this had crossed it. Again, pay attention to wave and what you call engulfing candle, and the reason why you have that. In impulsive wave or a motive wave, we know that there is momentum in wave 1, wave 3, which is the highest momentum, and wave 5. So we expect that those 3 will give us momentum candle, engulfing candle in wave 1, 3, and 5. When you are doing a correction with 5 of correction, or with C of correction, because wave B might actually go, wave A might actually go up correctively. Wave A might go up correctively, but wave C would be impulsive. So, and immediately after wave C, you see wave 1, which is another impulse. So again, if you are confused, you see one impulse, you see another impulse. Wave C, giving you an impulse to the downside, is to lure you as if they want to go that way. You must know it's wave C, and it's going to end there. If you don't see an impulse, then you begin to query yourself, is this a wave C? In an ABC correction, wave C will always be an impulse. But if it's a zigzag correction, you expect impulse in wave A and impulse in wave C. It's a zigzag correction. But in a flat correction, A may not give you an impulse. B, you don't expect an impulse. C will give you an impulse. And impulse in that sense, it's an engulfing candle. So you must know all of that. So, and that knowledge will help you when the news is pushing price and is giving you what you think is an impulse, and you say, oh, this is an engulfing candle and we are going this way. You should know that in your structure formation, are you done with C? Is it that you're going to have a new wave? If you have not done a C, you must now know that when the news is giving you a big push, it is a C wave. Now, the use of a trend line also will guide us, like I said, to know the end of a particular wave. So if you draw your trend line from here to here, it connects, probably breaks around this area, tells you the momentum is being lost when the price is crossing your trend line. So all those things, knowledge that you have learned, they are not wasted after all, but you have brought finesse into your understanding and to know, oh, what next, by knowing Elliott wave structure and wave count. That is just one thing. And you must also know that in this market, you can never end with them. You can never start the trade with them. But you have, knowledge to know this is the zone that I expect things to stall. So if you know the zone, they might choose to do on wave 5, 123, 127 and end it there. They might choose to make it 161.8 and end it there. So for you, they have left you guessing that are they going to do 123? Are they going to do 161.8? They will even leave you guessing because they can even truncate it. It won't even get to 123. It might not even touch 100 retracement of the extension that you are expecting. So that is left for them, but you are going to be looking for signs. Now, this next point is what I want you to hold in your left hand and never part away with it. We tell ourselves it's an ending diagonal. We tell ourselves it's a leading diagonal. Whatever the diagonal is, we know that a leading diagonal is just in wave 2 or in wave A of a correction. And we know that the ending diagonal occurs in wave 5 or in wave C of a correction. Now, the point I want you to hold on to is that immediately we are done with an ending diagonal. The first move of the wave, like I said, in wave 1 will be an impulse. An impulse of 5 waves in its micro elements. And oftentimes, it's going to come and come down to a wave 4 of the previous move. It will break it. If it does not break it, it will come to it. Most of the time, it breaks it. It violates it. And upon that violation, you can now tell that for sure, we have finished this move, and this is the first thrust against our move because it has violated wave 4 of that primary. And when that happens, all you can wait for, because they have shown you this is where we are going, wait for correction, because they are going to correct primary 2 as an ABC, and that is where you can now enter trade with them. In case you are not able to enter at the peak or at the low, as the case may be, if you are selling or buying. I'm building things, so I'm going to go into the chart. Now, I want to show you something interesting here. Because after this move, we said the whole of wave 4 has ended here. Wave 3 has ended here. This is wave 1, ABC. This is wave 1 of the thrust here, A, B, C of a 2, and we see wave 3 here. In the wave 3 itself, in the inside of wave 3, and this is wedging to finish wave 3-3, and we have an ABC of 3-4 here. You can see ABC of 3-4, then we have the 5th wave here. Now, this one came down. You could have thought that it was going to end this cycle and continue to move down, but it never broke this. It never broke wave 4 of that primary 3. It never broke it. So because it didn't break it, it's also a correction of a wave, a bigger fall. So we see this as 3-3, a 3-4, and a 3-5 to have finished a 3-5. And we now saw this because 3-5 has ended, we saw this as a bigger fall. Now, in its being a bigger 4, we could see it in this light of a bigger 4 as an ABC. Sorry, as an, yes, the first one, an ABC of that bigger 4 in the middle, and we have a fifth wave. You may want to see it that way. But the best way we see it is immediately we have finished this. It could have finished the old move as a 5-year. We saw the first wave as an A. We saw this as a B. In that regard, we saw this as a C, and we add this move. Anyhow you want to label it, you can label it that way, or you can say this is an A move against this, the old move, because it has fallen out of character of this particular wave here, which is an A. Then we now see A, B, C of a B. Then we now see a C. All this also will give you, an extended flat in the middle. Anyhow you want to see it. But being an extended flat in the middle, this old correction here is just correcting this as a flat, an extended flat. And because it's an extended flat, then by the time you are now looking at the complete retracement from down here to this point is at 50. So you can now see that at this level, it broke primary 4 here of a 3. It broke it to tell you that because it's in a corrective format, in a corrective, highly corrective format, then it's not impulsive. Then we know that this is impulse and this is correction. So these are shown us clearly that we are not coming down now to break this. If we are coming to break this, we must have probably seen an impulse that will travel so deep. And if they had wanted to give us a deep correction and to make this one a highly impulsive to the upside, probably would have had a zigzag immediately after this move to drop the price very close to this area before we move to the upside. That is not what we are seeing. So we are seeing a highly corrective move. And we thought that we are done with this correction. This is the peak here. This is the low of this correction. And that this move in the middle is another move for us to break to the upside. Now, we are going to dissect this move to know where we are in this move. So we are done with an A, B, C of a B, and a C. So we are moving against this base that we don't want to see us break this low now. We don't want to see price come to take the low of 1.044 or 4.500, 1.04500. So we don't want to see price. And anybody that does not know anything about structure and Elliott wave or wave will think that, okay, we still have space in here and in between here for price to travel. So you'll be guessing that price is coming around this area to take it. But what are we seeing? Have we ended this? We're going to see it. So immediately after this move, we see this as the first move to the upside. Then again, we can see also that there is a wedging triangle in this area. If you draw the top to connect the top and drop it down, I'm going to show you all of that. And you take this from here to this point, we are seeing a wedging triangle. So a wedge is developing. And after that wedge, there's going to be an explosion to the other side of the triangle. And the other side of the triangle we so desire is to the upside. But for now, are we done here? When I told the story here, I told the story of a complete move, A of the first correction, A, B, C, of B in the middle, and a C to finish. That was the way I told the story. So we're going to tell the same story around this area too. So after this correction, you can see the way the shape of this compared to the shape of this. This is just smaller. We saw a move also as the first move. This is the first move here. A of the correction, A, B, C of B, and a C. Now we see this also in that light as a first move. We are yet to break here as a first move. We saw this as an A of the first correction. We saw this in the middle here as an A, B, C of the second correction, which is the B. And we saw this as a C. Do I come again? This is A, this is Euro USD. This is A of the first move. This is the first wave to the upside, like a 5 waves to the upside. We saw this as an A, then we're going to have a B. B is always a triad. So we saw an A, B, C of a B. Then we should see a C, and the C should come to the downside. So A to the downside, B to the C to the downside, and C to the upside. But is this C correct? Finished. Now, we are going to study the structure in the middle to know if we are done or not, okay? Now, how do we know that we are done or not? We come from this origin of A to the end of A. That's the first move. We take B as a single wave. So this is the height of B. This is the low of B. So A gave us the highest height of B. B of B gave us the lowest side of B, but the C fell lower. Now, when we see that, what is A to B giving us? So to know what A is giving us in terms of B, if we take our fib retracement, okay, let me just bring it. Okay, if we take our fib retracement, okay, let me go somewhere else and show you before I bring that out. Let me go to Pepperstone. Okay, so I'm going to take out all this drawing that we have here on Pepperstone. Good. So from this A, this is A, and we want to see what retracement of or extension of A is B. We take this from the low of A to the height of B. To the height of A, the origin of A to the low of A. So from here to here, this is at about 123. So we know that A to B gave us an extension of A to 123, which is this area. Now, we expect that C should be an impulse, and that is what is turning out to be, because this is C to the downside now. This is A, B, C of B. This is C of B in 5 waves to the upside, which is correct, because C will always give us a 5 waves format. So 5 waves to the upside, which is correct for C of B, and that this had come down as the last C. The last C, because this is 123 in terms of retracement or extension of A to AB. So this move to the downside can always be a running flat. It can always be a running flat. So let me now show us what I'm trying to say. Let me go to where I have my drawing and show you at once all the rubbish I've been saying. Now, this is the rubbish that I've just told you. That saying that this trend line told me that this wave is completely gone and that this is a correction. Now, after this correction, this is the height of the correction, the high and the low of the correction. So drawing this, we are seeing a triangle and a wedge developing and connecting this and connecting this. So we need to break out of this blue wedge now, between this blue. Now, this is trying to guide, I don't need to even put this one, but it's just to tell myself that once we begin to break out of here, then we are going up to take this upper edge of the triangle. So that's what I can see here. So it's more like a triangle within a triangle. So anybody could have just thought that the one here is a triangle. There are those people said, looking for sign like triple top, triple low, head and shoulder, and triangle and all of that sees this. I don't see this. I care more about the wave that is developing and what is telling me. So you may say, oh, this is A, B, C, or 1, 2, 3, 4, 5 of the triangle, and you are moving up. It can work for you like that. But for it to be a proper triangle, it should be taking this, and coming down and this. So I don't know about that. But like I just take it as a wedge that is developing, but I'm more concerned about what is happening inside here. So this is the first move, and this is A. You can see A, B, C of a B, and the C. Are we done with where C is supposed to be? That's what I'm trying to say. So looking at this, I think this needs to go a bit up. Yeah, like that. So this move from here to here is our A. Let me use that. So our B, the first part of the B comes here. That's an A of a B. Let me change that. That's the A of a B. Then from the A of a B, we came down to the B of a B, which is a flat in the middle. Then from there, we go to the C of a B, which ended here. And that is a five waves format. 1, 2, 3, 4, 5. So, which is what you expect in C. So this gave us B wave flat in the middle, give us a running flat in the middle. The B wave itself gave us a running flat in the middle. So for us to know how to now deal with this B wave, I would now take this and say the whole of B wave is from here, from this point down to this point. If we want to sum it up, that is the whole of B wave. So that's the whole of B wave. So the connector, if you want to now put in the connector, the connector, because the connector is just this 1, 2, 3 here. So, but we'll deal with the height of it. We deal with the height of it. So the low of it and the height of it, that's the span of B wave. That's the A wave. So if you now look at the retracement from the end of B here to the origin of B there. So what do we have? We have approximately about 1, 2, 3 to the downside. So if we have 1, 2, 3 to the downside, you know, for a B, a C going down, if it's a one, so if a C going down can only give us a running flat, because if A comes down, and B overshoots it to a 1, 2, 3, which is a C of B, overshoots to 1, 2, 3. So we expect that the only thing that this one can now be to the downside will be a running flat line to the downside. It won't touch, it won't go past this area. It will not go past the origin of C, will not go past the origin of a B. So that's what this one is technically telling me. So in that case, if that is what is going to be, so we take our extension tools to look for a 161.8. If we start from the origin of an A and we go down to the end of a B down here, so we come back to the height of a C. The most high of a C here, we look at 161.8 is around this area. Around that area. So we know that price will not break a C here. So now price had touched this area. Can the price come here? Price can choose to come here or not. But we're going to now see that the C inside of here, what has it given us? So let's now go inside of that C on a 4-hour time frame. On a 4-hour time frame, so we now know that this one coming down like an impulse is a C, and it was probably came down like a zigzag, an A, B, and a C. So this one, it's what we now have to look at in itself, what it has given us. Let me change this. This is the A part of it. And this is a B part of it. And this, what can confuse people, you think that this thing is just going to be going down. A C part of it. And now looking at what the price has done in terms of a fib retracement, we're going to look at that. So what do we expect in terms of a retracement of a zigzag as an 100 from this area to the end of A wave to a B wave? So we expect the 100 to be air. We expect the 100 to be air. So that's where we expect the 100. Mark you, the 61.8 that we got was here. Now, for anybody that wants to trade, we'll be concentrating around this area of 0.6568 to pick a trade. This is what is happening here. As this thing ended, what are we doing? We have to know that fast. Now, in terms of the move, the old move from this point to this point, if I use deep green, then we'll try to look at the extension to the downside. So we know that this point is 76 and the point below it is 78. So it broke 76, it touched 78, and it bounced up. So anybody could have been, okay, let me buy at 76 retracement of this old wave. And here that we thought it's 61.8 in red, it's the low of wave 2 at 88. So price coming down may decide to choose any of those fib area, 76, 78, 100 here, or come here. But we know that it shouldn't break below here. So are we still coming? That is what one thing we're going to see. Are we still coming down? Are we done? Now we are going to be going to look inside of here on a 1 minute on 1 hour time frame. We're going to be looking at the A wave. Now, when we didn't know this was giving us an ABC of the fourth wave, and this went up as wave 5 to finish that part, then this was a wave 1, a wave 2, a wave 3, a 4, a 5. So we had a break out of here by this candle, and we are taught that price will continue to probably sail up. Then in an attempt to sail up, of course, if anybody wants to, probably what was looking for, to pick, and that's why you don't just follow price, because they may just come here, take it up again, and break up. You are looking at this. Let me see a three-way wave pullback, but it came down, it gave us this move, came here, you were expecting an 100% around this area. The price did a small correction to break low. And if you had waited and you didn't pick your buy from here, even if it broke low, you'll be losing a little and you wait for price. So from here, I'm trying to teach us something. What we had seen on the higher time frame. So if you had wanted to even do an 100% extension from here to pick your buy from this low here up to this point here, this height here, you will know that your 100 can be here. Price will not want to do your 123 if you are seeing this as a second wave. So 123, 127 is low, then 161.8 had passed it. So what reasonably you would have thought of doing is to come here. price would have picked you here for a buy. So waiting for a buy, and you are seeing this correction, you think, okay, if it pulls like that for more than necessary, more than 24 hours, prices probably will just continue to go up from here. But again, what price did here, I knew that this was going to break low. Why? Taking the fib really here, and try to lace it here at 88, which is the last place I expect price not to break. Because price broke it by this week's, I know that this thing is still coming down. And if you didn't see this on time, all you would have lost if you place your stop loss below just at this line here, because you wouldn't be expecting, based on your knowledge, that price is going to come. If it's going to go up, you will just lose about 24, 25 pips. That's all that you will lose. But if you had seen that price had broken this area, some people will just let me just get out. Let me see what they're trying to do. Let me see what they're trying to print. Let me get out. That's another thing you can do. Let me get out. And the price is not expected to have broken it. Let me get out. They are not fooling me. Something is cooking. So now, price went down by another, how many pips? By almost like 80 pips. So that is huge for some people. 80 pips, price went down. So this is where price is at the moment. This is where price is at the moment. So we are seeing the A leg of the zigzag, the B, and the C. Is this C completed? That is where we are. That is what we want to see. That is what we want to find out. Like I always tell us, 1 and 2 wave, this gives us the trend, resistance for 1 and 2 wave, to know if it has ended or not. Once we break out of here, we are sure that we have completed that move. But within wave 3 itself, are we done? So because wave 3 started from the height of 2 here, then we're going to push this down from this high to touch this area. This has proven to me that the old wave 3 is done. Now, if the old wave 3 is done, it means that most likely wave 3 is completed here. Inside of wave 3 is completed here, and we see this as the 4th wave of that 3. And this is maybe wave 5 of 3. That is how to navigate. This is seen as it has broken it. It tells you wave 3. Anything that has to do with wave 3 is gone. So it means wave 3 ended here at this pin bar, wave 4 and wave 5. Now, this wave 4, is it wave 4 of 3? Now, this wave 5, is it wave 5 of 3? Or it's a major 4, is a major 3? Now, what we will have at the back of our mind is that since we know that price still has the tendency of coming to this red line, price may still want to come there. But we know that at this point is the point of 100 extension to the downside. Price may just push up from here. And price may want to come down again to take this area or take this area. So price may still break low by another 26 pips, 25 pips, but not more. But price may continue to push up from here without coming here. So our knowledge comes in as per what do we know about wave. So I'm going to take out all of this. We need to break this. I'm going to take out all of this and take this as the height of 2 for this wave. Let me see if I'm right on top of it. That was the news. Good. So if that is the height of 2, and I'm seeing this as the low for now, let me take this out. This for me tells me we are at the end of this wave. So these I see as a 4th wave of 3 here. That I see as the 4th wave of 3 here. This price came up to break it. This may be an impulse that has broken this. Because it has broken it, it could well form with what I know as the ending diagonal or a leading diagonal, as the case may be, to break up from here. It has touched it. Otherwise, it ought to have played under it. But again, if I'm going to have a big fall, I come to this point, to know where am I going to end my big fall if I'm going to have it at all. I'm going to end my big fall here at about this level. That's where I'm going to end my big fall. So once I break out of that place, I'd confirm that I'm going up and it's not a big fall anymore. But what we do know as an ending diagonal or leading diagonal is for price first to come, take up this fall, and it has taken it. And this is where I'm going to now be digging down to see what we are doing, because price may be pushing up from here. If this going up is not going to take up this and give me a 4 and push down one more time as the last 5 to touch this 100, then I should have seen this more corrective than giving me an impulse in this area. So I'm going to go on to where at done. Let's take it down. So for me, this is a clear 3, and this went up as a 4, a zigzag here as a 4. Then I see a 1, a 2, a 3, a 4, a 5 here. So let's go to some other drawings that I've labeled and see the way I labeled it. This is 5 minutes time frame. That's the move. That is the move. So we have seen a break out of here, which means wave 3 is completely gone. For now, we see this as a 4 in the yellow or golden yellow, and this may have ended 5. Now, this came down as a wave 1, 1, 2, 3, 4, 5, as a wave 1, and this went up as a wave 2. Anybody could have seen that, okay, if this was a wave 3, maybe it came down like that to 1, 2, 3, 4, 5 of a 3, and you are seeing this as a wave 4 and a wave 5. If it's an ending or leading diagonal that we expect in a leading diagonal as a 5, 1, 2, 3, 4, 5, 3, 1, 2, 3, 4, 5, another 3, and the 4th wave here, the 5th wave here, which could be the 4th wave here has been taken. And that is what I said of an impulse. The impulse that is going to come will take this. If you are still doubting it, it has taken the 2. What are you waiting for? It has taken this 2 here. So even if you think that this is a wave 4 and this is a wave 5, it has taken 4 here, the primary 4 here, 4 here. It has taken 2 as I loaded it. Once it takes this one, what are you waiting for? It has finished this wave. This is a move. Now, in this being a move, if this is going to be a 4, I would have expected something more corrective. An A, B, probably the C will not break here. But again, anything is still possible because we're in the last point of movement of this trade. So what I'm trying to say is that don't be surprised if this will still come down and take the low. It is allowed. In that case, if it comes down to take this low, it's now running this wave as a big 4 for the last move. We're going to see. But so far, the way it has moved up to me, for me, in a 1, 2, 3, 4. And what I expect that this also is going to give me probably a leading diagonal for a 2 of this wave for us to pick a buy. Now, being it as a leading diagonal, because it has not come down to take this primary 4, we are not ready. So when it takes the primary 4, I know that we are done. So it has not taken this primary 4. A primary 4 will always be taken for us to know that the wave is trying to now come down. So if I see this as a 2 and I see this as a primary 4 here, this is just trying to end this structure to come down. So when it comes down to break here, then I can now probably make adjustment of the height of my 5. For now, it has pushed this from what I did yesterday to around this area. And that's how we try to change and modify entry. And people don't know. You think that, okay, just give me an entry, stay there, price will not change. It will change structure and you have to go with the structure. And that's what people don't know. So now it has changed that, push 3 here. And let's see, from these 3 to 4. The 161.8 here, it has extended this. So this is a new wave. It has extended it. So it could be a 5. But the day we come to take this low, then I know that we are coming to break and correcting again, deep. So all these one can change you know, I might be giving it once I see it break and break down here, then we know that we are coming down. So, and this may be a 1 and a 2. This may give us a 3, a 4, the 5th wave to cap it before the breakdown. But if it continues to break down from here, that means it's done and we are correcting. So, and if we are correcting, we are going to see, we are correcting as an ABC, and that will tick. But if this one comes down in a 1, 2, 3, 4, 5, then I know that a 1, 2, 3, 4, 5 formation, it's like the 5th wave, the last 5th wave. But I don't expect that for now. Even if this is going to come down in a 1, 2, 3, 4, 5, I still need to see an ABC go up one more time, come down in a 1, 2, 3, 4, 5. So we're going to wait and see, because it may have ended the whole show here as a 4, a 5, and the first move of a 1, which is 1, 2, 3, 4, 5, and ABC of a 2 around this area to push higher. So that is what I'm seeing here. I want you to listen and probably watch this over and over and again. So the same thing, it's happening, you know, it's a zigzag correction to finish up that triangle. And if you go to NZD USD, it's the same thing that is happening here that we are seeing on NZD USD, but the correction on NZD USD is not that deep. If I take it to the 1 hour time frame here, let's go to 4 hour time frame. So what NZD USD is doing, it's different. It has gone up like this and gave us like an expanding triangle correction here. So where I see after this move of a 1, 2, 3, 4, 5, I see this as an A, B, C, D, and the E for us to go up and take the top. That's what I can see. An expanding triangle formation in this area. And if it's what I think it is, price is going to break up and continue to go up higher. That is what we are going to be seeing here in this. But the same way, so we saw an A, B, and a C. And this is 1.8 extension of a C, which I don't expect price to take, because the 161.8 extension would have gone beyond what a 2. What a 2 can be here to this one is at this level of 88. If I'm still correct, that is 88 here, this red area. From this low to this height, yeah, the 88 is dead. So if we take 88 to the downside, is something else that is cooking. So like this also is going up. So it didn't take 100, and that was why I said that it might not take 100 as a wave of a zigzag. A, B, then the C part is this. A as a 5 waves, the B and the C part as a 5 waves may have ended its correction. And gradually, let's go to 15 minutes time frame or 5 minutes time frame. This also as a 5 minutes time frame. So we see a 2 here, and the height of what a 4 can be, if it's still a 4, is from this 2 down here to this point. It has broken it slightly. It has broken it already. This is 38. almost, in fact, it's touching a 40 now. So that's a 40. So for me, looking at what NZD USD is doing, this is almost eradicating the possibility of this being the fourth on a big cycle. So it might just be a new wave. So the best you can expect is for price. It has taken out this primary four here too as an impulse to the upside, taking this primary four here. That's what will happen. So a 1, 2, 3, 4, just like we saw with Euro USD. So a 1, 2, 3. So this might just be 3, 4, and a 5, and a new wave around this area. If anybody is even counting wrong and you think, okay, for a leading diagonal, the 4 comes between 1 and 2. This is 1, this is 2, this is the 4th, and it came down as a truncated 5, anything you call it. But when you look at the higher time frame, you might be able to probably begin to relabel and recount and recalibrate at this as, you know, the first move A, B, C of the 2 here, probably a 3 and a 4. These are taking the low of this wave, the primary 4 here. Maybe that they are trying to do a kind of a formation and an A, probably a B. So we'll see, are they going to take this top for now? Are they going to come down? Is this the first move to the downside? Is this a wave 2? We are going to see. So let it come again and take this low. Once it take this low, then we can recalibrate. Otherwise, it may just be coming down as a correction. So it might just give us a flat, but let it come down and let's see, or a regular flat, but let's see. Once we begin to take this area again, so we know that we are done with this and we are coming to break, so we can probably quickly recalibrate to know what entry is going to give us. It might change from what I gave. So that's what I can see here. With that, I think I've covered most of this, and then we're going to gold. That is where we need to see what is happening on gold. On gold, the daily time frame. Gold on the daily time frame, just like we said, with what we know, for if we are going to end a particular trade, a particular trend. So this is seen as if a 3, a 4 here, of the third wave, and a truncation here, and this is the fourth wave, big 4 wave, the fourth wave here, and this may be seen as the fifth wave for us to have a big 4 here. Now, if truly we are changing trend, this coming down would need to take out this. Just like I said about the ending of the leading diagonal, it needs to take it out. And that's one of the reasons why we believe that price may not necessarily break here before it goes up for wave 4 and for wave 5. So if this is wave 4, price may not take here because it came down, correcting wave 4 to the downside, a big 4 to the downside. So this is seen as, instead of a 3, the fourth wave of a 3, the fifth wave of a 3, so which has ended with 3 properly here. And that this seen as a fourth wave of a bigger correction means it might not take here before pushing up. Now, this is daily candle, and we had seen a B formation here, and that this is yet to tick an 100. So anything is possible here. We can take up here and begin to go up. Before you know it, we're going to break up. But the way this had gone up, it's really telling me that this is looking rather too bullish for me. When we add this as an A, we had this as a B of B and a C of B. So are we going to be seeing the same as an A B of B, and a C of B for us to turn down? So we are going to look at that possibility that if we have a C of B and we're going to turn down, then we should turn down and break to the downside. Let me go somewhere. Let me go somewhere and take out drawing. I think if I come here, let me see if I can bring up. Okay, I can still use this. So when we add this A, B, C, what extension did they give us to the upside? From because this is the fourth wave, this came down. So let's see what extension it gave us. It didn't do more than 161.8 to the upside, which is still good. If it has broken 161.8, then probably would have been in a new wave to the upside, and it came down. So with this also, if you take this as the B, the highest point of B as an A, and we take this as a B point, then, and if you want to extend this for us to come down again, in case we think we want to come down, we want to look at those levels that price may tell us that it's not coming back down. So this point is an 100, and this point is 161.8. This is 123, 100, and 161.8. So we're on the daily time frame to look at that. That's against this area of the peak of a B, the B wave. So if we should go down on a 4-hour to now look at what we have, even if you are correcting that as a wave 2 for more downside, which is not what it's going to be, price should not break this level. So the possibility of 161.8 cannot even be an option for price. It cannot be. This is an 100. This is one. Oh, this is an 100. This is 127. But looking at what price is doing here, if this is a 4, is this a 5? That is where it's kind of funny for me. Is this a 5? It doesn't look like a 5. The way it went 1, 2. This is a 3-wave to the downside. This is a 3-wave to the downside. And this 3-wave to the downside, it's like a truncation of C, and it's not even 100. So we look at what price we do. So even this one trying to go up from here, it shouldn't even come here. So quite a lot of possibility around this area. A lot of possibility around this area. A lot of possibility. And so Can this be the first wave? Have we ended this move? Is this the first wave? Is this the second wave to the downside? And this is quite impulsive to the downside. We are doing analysis of what this could be. So this to the upside, to the downside, it's at 85. So this may be wave 1, wave 2. We might be going on for a wave 3. So I think the best bet for any one of us is, let's look for correction of this wave. If it corrects, we'll pick a buy to go up with it. That's the best we can do for now. And if it breaks down, fine, it's good. So they might end up giving us a triangle. So it might just be 1, 2, 3, 4, 5, and the last one comes down before we go up. So it might just be that. It might just be 1, 2, 3, 4, 5, and the last one comes down if it's going to be a triangle. So if it's going to be a triangle, it needs not to break here. It needs not to break here before coming down. So if we take this low, then we know that we are going to break low and still take 100 or cap this area. This is the area, but price may be going up from here. So we must be ready for anything that gold is going to give. If we are taught that this is the first push to the downside, and it is a 5 wave, let's go inside of the 1 hour for you to see what I'm trying to say. We are taught of so many possibilities around here, but this is where you continue to dig and dig and dig deep. You dig and dig and dig and dig deep. So this is seen as the first wave, 1, 2, a 3, a 4, a 5 here to finish a wave 1 or wave A, and this is seen as a B, the height of a B, A, B, C of a C. That is what we are taught. That is what we are taught. And if you look at that retracement to the downside of that wave in itself, from here down to here, back up here, the 100 is here. There's a truncation. It didn't get to 100. There's a truncation. So it may be dealing with this as a 2 and 3, 1, and price will be coming down. So we need to see what is up here. But in as much as what we are seeing here, it's quite like an ABC here, a 3, a 4, and price may be going up. So if we don't take the top and we begin to come down to break this low, then we are in for a correction. So we're going to see the way it comes down. If it comes down correctively, then it's a correction. If it comes down impulsively, it's going to break low. So that's what we just need to do on gold now. That's what we need to do on gold. We have to wait. We have to wait for what is printing. So, but if I have to look at the kind of retracement it has done to the upside, this is 88 here. If price should take this point up and break it to the upside, then we are in a bullish move. That's the last place that price must not break. Otherwise, we'll be in a bullish move. So it will be interesting to see if price will come down and take this low. If price comes down and take this low correctively, we'll look for a 3-wave correction for us to buy. If price breaks to the upside, we're going to look for a correction to buy. But if price begins to go down here, it's 50-50 to the downside, which means that price may still break the low. That's me. But I would have, if you're going to go bullish, I will be praying for this to break up, then come down for correctively for us to buy. That will be more decisive and more direct for us. Take up this, come down. But the way and manner I'm seeing this more likely consolidation here to take up and break up here, then probably finds resistance here or break above it, not hold, to come down for correction for us to pick a buy. That is what we can do. And that's what we can, how we can now begin to, if anything changes over during the week, I will update on gold. Well, for now, it's a bit messy. It's not pushing quite low as we expect. It's not pushing. That won't even take this as an ABC for a further downside. We are going to continue to look at what it's doing. So with that, I've come to the end. It's long because of what and what had to teach us. So happy trading.